So the OPEC production cut is one of the reasons we are bullish on oil, but that's definitely not the only one. We've seen, amid the oil price meltdown of the last 2 years, we've seen supply responding to the downside in a wide range of geographies. I think everybody knows U.S. oil supply has been falling, but it's also been falling in places like China and Mexico and Colombia, and it's even been falling in some of the OPEC countries without having an official cut, simply because they're not able to produce anymore. So that's one of the reasons we're bullish. Demand has been looking quite strong. Demand from China, from India, from other emerging markets, and even from some of the developed economies, including the U.S. Demand is actually in very good shape. So our perspective is oil prices in 2017 have to be meaningfully higher, even after the recent rally, to support a more sustainable level of investment in the industry. More capital spending, more drilling, more wells. If that does not happen, then supply will continue to fall. And if supply is falling while demand is rising, eventually we get into an undersupplied market. So to prevent that from happening, prices will have to continue to recover. So that's oil. Now, natural gas in North America is a different story. We're not nearly as upbeat on gas as we are on oil. And one reason is the supply declines that we've seen in oil have really not panned out so far, at least in the gas market in any significant way. And meanwhile, demand for gas has not been particularly strong. Now, there is talk maybe if the economy accelerates and the industrial sector picks up steam, that would be good for gas demand. But generally speaking, right now, between those two major commodities, we're a lot more upbeat on oil.